Hi everyone. Today we're going to be talking about how retail investors can invest in Thailand through ETFs and OTC equities. This will be part of our Southeast Asia video series, and we'll be explaining what options are available to investors as of September 2025. So if you're interested in possibly investing in Thai companies, this might be a useful presentation for you. And as always, this presentation is for informational purposes only, and it is definitely not investment advice. In this presentation, we'll cover four possible ways to invest in Thai companies. First, we'll talk about the iShares MSCI Thailand ETF. Then we'll look at a regional ETF, the Global X Southeast Asia ETF, which has a reasonable Thailand exposure. Then we'll look at some options available outside of the US. And then finally, we'll talk about some OTC companies that trade on US markets. First, we'll take a look at the iShares MSCI Thailand ETF, ticker THD. This ETF is the simplest way and the most direct way that US investors can access Thai equities. The ETF tracks the MSCI Thailand IMI 2550 index, which means it covers a full investable market, large, mid, and small cap Thai stocks. The 2050 here refers to the diversification rules, making sure no single company makes up more than 25% of the index, and the biggest holdings combined don't exceed 50%. So, in short, this is basically a broad representation of the Thai stock market with safeguards to avoid overconcentration. The ETF was launched in 2008 and currently has 227 million under management. It has an expense ratio of 0.59%, and the ETF currently has 88 holdings, with top sector tilts being energy, financials, and IT. Here's the performance data for THD, which is from ETF Database. Check out the URL in case you want to access the full page of information. ETF Database is a really good source of information on ETFs. And what this shows is that it's pretty straightforward. THD has posted some solid short-term gains, but over the long term, the performance has lagged well behind broader emerging market benchmarks. This suggests that Thailand has been a volatile, range-bound market, one that struggled to deliver consistent growth compared to other emerging markets or peers in the region. The ETF's underperformance might be due to a few different factors or a combination of these, which include but are not limited to sluggish economic growth, export headwinds, ongoing challenges in tourism, structural issues within Thailand's markets, and recurring political uncertainty. Despite these long-term issues, THD still remains the simplest and most direct way US investors can access the Thai market. While THD is the only dedicated Thailand ETF available to US investors, another option is the Global X Southeast Asia ETF, ticker ASEA. It is issued by Global X, which is part of Mirae Asset, a major South Korean financial group. ASEA tracks the FTSE ASEAN 40 index, which covers the region's 40 largest and most liquid companies. The fund is heavily concentrated in Singapore, which makes up nearly half of the portfolio, but Thailand has the second largest weight, currently at about 18.5%. ASEA was launched in 2011 and currently manages around 66 million in assets, making it smaller than THD. In total, it holds about 40 companies, with a strong tilt towards financials, which account for nearly 60% of the ETF's allocation. Here's the performance data for ASEA, again from ETF Database. Check out the URL if you'd like a fuller picture. The ETF shows modest but positive gains over 1 and 3 month periods. Over longer periods, it's delivered a strong performance, about 10% annually over the past 3 and 5 years. By spreading its holdings across Southeast Asia, ASEA benefits from the region's diversification, while its heavy tilt towards financials adds stability across some of the region's fastest growing economies. As a result, ASEA has outperformed THD in the long run and offers a more balanced option for investors who want exposure to Thailand without being limited to Thailand's issues. Outside of the US, for European investors, there's the Xtrackers MSCI UCITS ETF, which is domiciled in Luxembourg and trades on European exchanges. It tracks the MSCI Thailand index, similar to THD, but it's designed for European investors under the UCITS framework. For foreign investors who may be based in Thailand with long-term visas, another option is Thai SET ETFs, such as funds tracking the SET 50 or SET 100 indices. These are listed on the Stock Exchange of Thailand and are accessible mainly to domestic investors. It's important to note, though, unlike Vietnam and Mongolia, which we covered in other videos, where foreigners can open brokerage accounts with just a passport and some paperwork, Thailand ties stock market access to visa status. This means only foreigners legally residing in Thailand with long-term visas can directly access these Thai ETFs on local exchanges. So in short, while these products exist, they may not be the most practical options. Finally, in addition to ETFs, there are a few individual Thai companies that U.S. investors can access through OTC markets in the form of American Depositary Receipts or ADRs. The list here is not exhaustive, but these are some of the main ones you might want to check out if you're interested in investing in Thai companies. Again, it's important that you check these out and do your own research on them in addition to what we're going over here. This is just an introduction to them. And it's also important to keep in mind that all of these trade on US OTC markets, which means lower liquidity and wider spreads than big exchange listed stocks. For most investors, ETFs like THD and ASEA are still the easiest way to get exposure to Thailand, but these do provide a direct route into some of Thailand's largest companies. First, there's PTT Exploration and Production, ticker PEXNY, which is Thailand's state-backed oil and gas exploration company. It's one of the largest energy companies in the country. Next is Bangkok Bank, ticker BKKLY, one of Thailand's oldest and largest commercial banks with operations not just domestically, but also across Asia. Then we have Siam Commercial Bank, ticker SMUUY, another major Thai lender and one of the most influential financial institutions in the country. And finally, we have Kasikorn Bank, ticker KPCPY, often called K-Bank, which is a leader in retail banking and digital finance services in Thailand. There are other companies as well, but we're not going to get into them here. And once again, to reiterate, these companies are available to U.S. investors on the OTC markets. It's important to remember that OTC equities often come with lower liquidity and wider bid-ask spreads. As always, be sure to carefully research these companies and consider whether or not they'll actually fit well into your portfolio and meet your investment objectives. So to wrap up, there are several ways for investors to gain access to Thailand. The most straightforward options are through ETFs, either direct country ETFs like THD or regional ETFs like ASEA. For those who want more target exposure, there's a handful of companies that trade OTC in the US, but investing directly in Thai equities is difficult due to strict rules around opening brokerage accounts. That's why for many investors in the US, ETFs remain the most practical and accessible way to invest in Thailand, and the same is true for Europe. If you found this video informative, please subscribe to our channel and check out VinaEdge.com for more information on emerging market investing. And once again, this presentation is for informational purposes only and is not investment advice.